Welcome to class 3. In this lesson, we're going to learn about trends, support, and resistance. So when we talk about trends, a trend can be thought of as a path of least resistance in a stock. Stocks will stay in this trend until a force greater or equal to it is thrust upon it. It doesn't matter if it's an uptrend or a downtrend. Trends are important because the lowest risk, highest rewards are those in the direction of the overall trend. Trendless stocks are harder to trade because they provide you no edge to your trade. So there are both uptrends and downtrends in stocks. Uptrends make higher highs and higher lows. Downtrends make lower highs and lower lows. The slope of your moving averages can help you identify the short, intermediate, and long-term trend of a stock. The 9 EMA, which measures the short-term trend. The 20 SMA also measures the short-term trend of a stock. The 50 SMA measures the intermediate term trend, and the 200 SMA measures the long-term trend of a stock. So we can see in this example, the stock makes its move down here and it starts coming back up. Now we've established we've got a higher high. If the stock comes back down, now we've got a higher low, right? So we got a higher low. The stock goes back up. That's probably about the same high, right? So here's our new high up here. So this is a higher high up here. Stock comes back down. This is a higher low, right? Because this is higher than the previous low. Stock goes up again. Now we've got a higher high. Now it comes back over. At this point, we probably got a higher low right here. And we're thinking, okay, so we're still good, right? But even it comes back down, we're still higher, right? We're still higher from this. So we've still got a higher low. Stock goes back up, comes back down. We've got a higher low. Higher high, higher low, right? So the higher high is up off the screen. Then you have a higher low. On the flip side, when a stock is in a downtrend, it's going to make lower lows and lower highs. So again, the stock comes back down. Now we've got a lower low. The stock comes back up. This is a lower high. So the previous high is up here. This is the lower high. Stock flushes back down. Now we've got a really big lower low. Stock comes back up a little bit. Now we've got a lower high because this is lower than this high. Stock comes back down, keeps flushing. Look at all these nice little, oh, these bear flags. Ooh. I would love that trade. Anyway, so it comes back down, and now you've got another lower low. Goes back up, now you have another lower high. And it continues down. You got another lower low. This high is lower than the previous one, so we have another lower high. So this is a confirmed downtrend. So if we take a look at this AAPL, which is for Apple, we can see almost the same thing that we saw on the previous examples. So the stock starts making its move up here, and we've got an established higher high. Stock comes back down. Now we've got a higher low. Stock makes another move. You got another higher high up here, another higher low, another higher high, another higher low, another higher high, and then it starts coming back down, and this would be a lower low. So this would confirm that the uptrend is over. So as you can see, we've got a new higher low. Comes down, we got another higher low. Comes back up, now we have a lower high. Stock flushes back down, now we have another lower low. Stock comes back up, it's still less than that, so we still have another lower high. But again, this right here, if this is up here, if this is higher than this, then this would negate the downtrend, right? So it would stop the downtrend. So that's how you can tell whether or not a uptrend is an uptrend and a downtrend is a downtrend. You can also tell by your moving averages, which I'll show you shortly. So now let's talk about counter trend trading. Counter trend trading has a lower reward and a higher risk. As trend traders, we want to be in trades that give us low risk and high rewards. We want those trades in those setups. So now when we think about trends, stocks will usually break in the direction of the longer term trend, right? So if you're thinking of your 50 SMA, your 200 SMA, if that trend is up, stocks typically will break towards the up. If this trend is down, well, the stocks will typically break towards the down. The longer term trend would usually have the most influence on a stock. Corrections on shorter time frames tend to be resolved in the direction of the longer term trend. So your moving averages such as the 9 EMA or your 20 SMA, when they're corrected on shorter time frames, they'll be in the overall direction of the longer term trend. So for example, in bull markets, you hear the phrase buy the dip. When a new trend is formed on a longer term time frame, that is a signal that the stock will be in place, sometimes for weeks, maybe even months. You will have numerous trade opportunities for months, sometimes even years. So the larger the break of consolidation, the more likely the break will hold and keep the longer term trend. First pullbacks usually get bought back up. The volume expansion is key here. We want to see increased volume. So we want to see, for if we're longing, we want to see bigger green candles. If we're shorting a stock, we want to see bigger red candles, right? So red for short, green for buy. If a secondary breakout occurs, or in the case if we're shorting, a breakdown, a new uptrend, or in the case of a short, a downtrend is confirmed. So if if a secondary breakout happens, then we know that we've got a new uptrend and it's confirmed, which is great because that means that we've got multiple plays. If the breakout is accompanied by earnings or news, there's an even greater chance the move is going to be sustained. So listen, all trends experience short-term corrections to the up and downside. Stocks cannot go up forever. If they did, no one could afford them. They couldn't. And if stocks went down forever, well, they would hit zero and no one would buy them because they would be worth nothing. So listen, we need to stop and think. Profit taking, this is what happens. People are going to take their stocks, they're going to hold it, and they're going to be happy with the profits they got, and they're going to sell, right? So volume is key. Light volume is good. We don't want to see any big red candles. Big red candles indicates that people are selling off their shares. We also have to be worried about stocks hitting a level of supply, which is what we call the resistance level. Stocks can correct in two different ways. First, they can correct through price, right? Through pullbacks, dips, the price goes lower. It all means the same thing. It can also correct through time, which is consolidation, right? Remember, side to side, flagging, side to side basing, it all goes sideways. All three of them go sideways. It all means the same thing. So now we're always looking for signs of trend reversals. So the signs that we'll see is low volume bounces, right, which is distribution. So again, the stock comes, maybe goes up and then it comes back down, and people are going to be taking some profits, right? That's what distribution is. They're unloading their shares, right? You're going to see a series of higher highs and higher lows negated for uptrends. And obviously, you're going to see a series of lower lows and lower highs negated for downtrends. Also, you're going to see a trend reversal when you break levels of support or trend lines or moving averages. You'll be able to tell with your moving averages because they'll start curling over and turning down. So now let's talk about support and resistance. Support and resistance are areas of supply and demand where a stock's current trend is likely to be reversed or movement is temporarily halted. There's a tug of war between bulls and bears over the control of a price, and this is what makes support and resistance level. Bulls think the stock is undervalued and the price will go up, and the bears think the price is overvalued and that the price is going to go down. So you get this tug of war. Resistance is when the stock reaches a point where the supply of shares exceeds the demand and its upward movement is halted. That is resistance. With support, it's when a descending stock, right, it's going down, reaches a point where demand for shares exceeds the supply and its downward movement is halted. That is support. Stocks tend to travel between the support and resistance level. We call this range. We don't want to be in range. We want a stock that's breaking above or below the range. Those are the trades we want to be in. So if we look at this example right here, we can see we have a clear resistance line up here at the top. So the stock makes its move up here. It can't go any further, and it comes back down. Right? So this is our resistance. Think of it as a door. Right? It's a door. It's preventing it from going any further. So when the stock reverses back down, you kind of get this a little bit of a support line down here. But of course, when I draw my resistance lines, I try to draw it across as many candles as possible. Now, I don't want to be like just across there. I want to touch as many candles as possible. That's what gives me a good resistance level. And you can see that this stock here, so when the support line was drawn across here, it's touching all these candles. Now, it's possible stocks will go above and below. So you can see right here, the support came down, got busted, but it held. It didn't flush. It came back up, and it kind of traveled in this range. This is what we call the range right here. So you can see up here, it kind of busted above the resistance, but this was a false breakout. That's what we call false breakouts. When it busts above the resistance level, but goes right back down. And it just kind of travels in this range. And of course, you can see when you get a breakout, sometimes it's nice, right? Sometimes you get a nice big long one, and sometimes you don't. Over here, You kind of get back and you get back into this range and it starts tapping down here. Next thing you know, this gets weaker and weaker. And then here comes the flush. So when a stock breaks over a level of resistance, that old resistance becomes new support, right? The same is true for stocks breaking under support. The old support becomes new resistance. Price has a memory. If a resistance or a support level has held for a long time, when it breaks, the move will be particularly strong because traders will have assigned more meaning to that level and be surprised when it breaks out. So again, let's look at this level here. So the stock comes up and now it goes over here. It's got this support level right down here. So the stock's not really breaking down too much. Like it might dip down, but it got right back up there. And it's just staying in this thing. It comes up here. Now the stock makes its move. This is as high as it goes. Right? Can't go any higher. So now we've got our new resistance level, and this is support. The stock comes back down, keeps hitting support, comes up. Now we've got a new level of support, right? Because it's hanging out here. So this one that's an old level of support, it's still support because it still means something. But right now, this is our most current level of support. And the stock stays in this range. Even though it kind of busts out over here, it's a false breakout, pops right back down the next day. So there's no confirmation of a breakout. So it just stays in this range right here. Now what happens? It busts through this resistance level, right? And it starts breaking out. Now this resistance level becomes a new support, right? So it was resistance, right? It was keeping the stock underneath it, but now it's keeping the stock above it. So what happens? The stock moves up, comes back down. Look at this. This old resistance level is now support. So the stock stays right there. So traders have assigned meaning that this is good, right? So the stock is being held up here. And what happens? It's rewarded. It goes up even higher. So let's talk about the types of support and resistance. First off, price. Price can act as support and resistance. If the stock travels up to 20 but can't go any higher, that is resistance. If the stock goes down as low as 10 but doesn't go any lower, that is support. Also, the amount of supply and demand at the current levels. So again, you may not have as many shares available for purchase or to sell. So again, that creates a level of support and resistance. Your moving averages can also act as a level of support and resistance. So the 9 EMA on your chart can act as support for a stock that makes a big move up and comes back down. So we have like a 9 EMA pullback, right? So the 9 EMA acts as a support level on the chart. The 20 SMA can be the same thing. Like later on in the days for day trades, we want a deeper pullback to the 20 SMA. But when we're swing trading, like the 50 SMA, that's kind of like your intermediate or your average trend, right? So the 50-day simple moving average, that's the average of the previous 50 trading day candles. And of course, we have the 200 SMA, which is your long-term support. So again, if a stock is breaking below its long-term support of 200, oh, that's not good, right? That's usually a big flush coming after that point. But what we need to remember is that some stocks react more strongly than others to moving averages as support and resistance. Moving averages rarely provide reliable support and resistance on non-trending stocks. And what I mean by that is when I say rarely provide reliable support, it's a line on a chart. All right, there's nothing holding it up. It's a line. The candle, if it wants to go below, bam. Remember, your moving averages are an average of the price for however many previous candles. So again, it can give you a guide. It can confirm trends. It can confirm support and resistance, but it's not going to stop the candle from moving wherever it wants to go. On trending stocks, they're a lot more reliable with the moving averages. So that's it, folks. We've just wrapped up the first of our 4 free comprehensive tutorials here that I hope has given you a taste of what it's like to navigate the exciting world of stock trading. If you found today's content insightful, first, give it a thumbs up. And if you're eager to dive deeper into this rewarding field, I have an incredible opportunity for you. Just below this video, in the description box, you'll find a link to my bootcamp course at parabolictradingbootcamp.com. Clicking that link will unlock an unprecedented opportunity for you to master trading patterns that have proven their worth time and time again. And here's the kicker. I'm offering to you this at a launch price of $97. That's over 60% off the regular price. I believe in empowering my students to succeed, not in perpetual subscriptions. So when you join my bootcamp, you get lifetime access with no ongoing subscription price. Now, you might wonder, how am I different from other trading educators? Well, unlike some of them, who use their course fees to trade and profit for themselves, my main goal is to help you become independent and profitable in your trading journey. They need your money. I do not. I am a successful trader with or without your money. My goal is to share the knowledge and experience I have gained over the years in becoming a profitable trader and help others find their financial independence. Unlike other trading educators, I teach you how to trade the market up and down, whereas others, they teach you one or two patterns to the long side, which is great if the market is strong and it's always going up. But that's not how the market works. You have to know how to play the market to the downside if you want to make money regardless of how the market is going. My focus is on providing you with valuable tips, insights, and real-world techniques, not just filling my own pocket. That's the Parabolic Trading Bootcamp commitment. So why wait? Start your journey to becoming a successful stock trader today. Remember, this offer isn't going to last forever. Make some extra money, take a vacation, supplement your income from your full-time job, pay your kids' college, learn to become profitable enough to quit your day job and trade the stock market for an hour or two each day, and spend the rest of the day with those that you care the most about. My friends, I want to share something with you that I believe truly sets the Parabolic Trading Bootcamp apart from anything else out there. I'm introducing a double money back guarantee. That's right, you heard it correctly, double your money back. Go ask other trading educators if they're willing to offer you the same deal. Some of them are too busy paying $3 million FTC fines for misleading their students. Others are focused on having you spend thousands of dollars for live boot camp classes that are routinely canceled and take 2 months or more to complete. These same trainers then force you to pay $199 a month to join their chat rooms where they tell you what trades they are taking only to sell you the shares they are trying to unload themselves. This is how strongly I believe in the effectiveness of the proven trading patterns and rules I'm going to teach you at the Parabolic Trading Bootcamp. So here's the deal. If after 6 months of faithfully following our trading patterns and adhering to our rules, you haven't managed to double the cost of this course and profit, I will personally give you back twice the money you spent on this course. This is how much I believe in what I'm teaching you, and I'm willing to put my own money behind it. Are they? But here's the catch. This offer only applies to those students who have diligently studied the material, abided by the training rules, and reached out for advice and guidance when needed. If you ignore my teachings, dismiss the patterns and the rules associated, and you let your emotions drive your trades, you will not qualify for the refund guarantee. I'm here to help change your financial life, but you need to meet me halfway. You need to commit, learn, and adapt. I believe in you and your potential to succeed in training. Now it's your turn to take the leap of faith and join us at Parabolic Trading Bootcamp. So I'm offering a package that is absolutely packed with value. Here's exactly what you're going to get when you join me at Parabolic Trading Bootcamp. First, you're going to get over 18 hours of recorded video content updated with new examples weekly. That's a $19.97 value right there. Second, I'm going to provide you with over 20 proven profitable trading patterns to help you take charge of the market. 3, I'm going to give you examples to show you how these patterns are played in real time. On top of that, I have swing trading strategies that can help you earn while you're working your day job. And for those ready to take the plunge, I'm going to offer you day trading strategies to help you quit that day job and focus on trading full time. You're also going to have access to recorded live trades where you can learn directly from how I played a trade. You're also going to have access to periodic live bootcamp classes where you'll also have access to recorded bootcamp classes. I'm going to give you access to my personal TC2000 layouts and scans, as well as access to my Thinkorswim layouts and the scans. And most important, you're going to get the chance to quit your day job and achieve financial independence. That, my friends, is truly priceless. But that's not all. You're going to also gain access to our future courses on cryptocurrency, options, and Forex as they're released. But be warned, once these are out, the price of the program is going to go up. Now, you get all of this, a package worth thousands of dollars for the limited time launch price of just $97. That's more than 67% off the normal price of $297. $97 can change the rest of your life. I have students who paid thousands to learn from me, and it's changed their financial lives. It doesn't matter if you've been at the same job for 10 years, if you're a single mother, if you're a freshman in college. Taking control of your ability to read and play the stock market will bring you more success than just about any job out there. And you won't be limited by salary or hourly wages. You won't be subjected to layoffs or downsizing. You will truly be in control of your financial destiny. $97 is what it costs for a typical date in a movie. Then it's gone. Take the same $97, invest in yourself, and turn your reward to risk ratio into numbers you could only dream of. Do not hesitate. Enroll today and embark on your journey to financial independence with Parabolic Trading Bootcamp.